Good morning, Trent. It is Friday. It is September 20th. And since I talked to you a couple of weeks ago, I think it's only almost been a couple of weeks. I'm just doing this on the fly right now. I just want to kind of give you a quick overview. Some of this, maybe, in fact, probably a lot of it, is stuff that we actually went over and when I was with you several years ago. But, it's my routine. First thing I do, in this case, just take the daily. I just simply want to know what the trends are. Right now, the trend is up. Okay, came up here, retraced. Not going to go into the old Fibonacci thing, but it met normal Fibonacci retracement levels. Re-rallied, came up, came off, and now all of a sudden you have a resistance level. And what did it do? It's kind of poking through it. So it's basically still an up market. That's the first thing I do. Then I draw from there. I go drill immediately down to the larger Keltners, and if I can get this thing to, there we go. That's the 65,000. And I use the tick bar charts because what it's measuring is the volatility of the volume of trades. That's the important thing. People use Keltners, but they use it wrongly. You have to use tick bars. Tick bars are the numbers of trades. In this case, it's 65,000 ticks per bar, and then I apply a Keltner to it. Now, a Keltner is an off-the-shelf study. And all I did was modify it, added a couple of other measurements, and I have a very specific inputs that I use for the Keltner, and it's been very accurate. It doesn't matter whether it's a 65,000 or a 65 tick. The inputs will always measure relative to the size of the tick volume. It will always find the tops and the bottoms and gravitate around them. If it's an up market, it will typically retrace to the midline and then hug the upper level. And then same thing on the downside. It'll go down and hug the mid-level and keep going until it breaks in the other way. Now, there's a lot of detail there we can go through some other time, but now that's the essential concept of it right there. And with that, I also have then the price forecasts. You can see that when I drill down now to the 20,000 tick bar, I overlaid with it the price forecasts. And again, the forecasts are a separate program that you see right here. And after I calculate it, I can then just graphically have those plotted on here so I can see both the volatility range, in this case the 20,000 ticks per bar, and I can see then overlaid with it where the price potential is. So that's another, what I'm getting at with all of this is layers, several layers of information that you get before you begin trading. You want to kind of know the lay of the land. There's the 20,000. Now I'm going to drill down to the 10,000. And you can see the same thing here. See that little blue arrow right there? I actually, I'm running right now live sim trades because I'm doing this because I'm recording this stuff for your sake, and I can't afford to be doing that and using my actual cash account at the same time because I have to completely focus. And when I'm doing these recordings, I can get distracted. So, just to let you know that. Right now I'm going to flip over to the 5,000, and that blue line, that blue arrow is right about here. And now to the 1,000. There's that blue arrow right there. And there's I actually I ran some trades yesterday. I've got some actual executions which I want to be able to show you later. Not in this video. It'll take too long. But I ran this up market and then this down market right here. And total time in the market was 40 minutes and came up with on a one contract basis about a little short of $500. You'd be actually doing 5 lots, which would bring you up to about $2,500 for the day. And that was within about the first 45 minutes or so of the trading day, which is the next point I want to bring up and the final point. I just had to interrupt myself and pause the tape, but I think I was showing you the 5,000. Now I drill down to the 1,000. You can see there was the blue that the long I ran yesterday, the short I ran yesterday, and again it was about total time 40 minutes. And right now we're looking at Friday morning, and this is the 1,000. Then I drill down to the 500. And again, here you can see where I was playing the long side, the short side. And it's just a progressive drilling down, always using the same concept every time you're setting up, looking at the general trend, looking at the price forecast, looking at the where you are on the high or the low. If it's moving up, you want to pick it up off the bottom side. If it's going down, you want to start putting your shorts on the top side of the Keltner ranges itself. The last one I drill down to is the 100 tick, and you're going to actually see, this is the perpetual contract. You can see the @ sign ES. I'm going to actually go to the December contract. You're going to see this morning why I run the live sims and don't want to be distracted, because I'm going to shift over now down to the 100 tick. And you can see that I closed that out at a $50 loss. I put this on, and I automatically put on a stop level as soon as it's executed. And I was playing the tick bar range here, picking off of the bottom, going to the top, and then I got distracted with a scripture study that I'm doing right now. When I got back to it, oops, it got down and was rallying back. And that was still safe. It wasn't a real big deal, but I would never do that if I was actually, I never would have left the screen. So you can see now that we're down near this bottom range right here, and we're near the bottom of this Keltner. I'm going to do something here for a moment. One of the things I absolutely do also is to check what's called Forex Factory. It gives all the economic reports, announcements that'll happen for the day, and today's Friday, September 20th. There's nothing going on, so I don't have to worry about being surprised right now by any news announcements. So I make sure that that's taken care of and gotten out of the way. So now, this might be a little sloppy, but for your sake, I'm going to execute a trade right now. If we go back to the longer ones, you can see we're not near the bottom of a longer-term tick bar range. That's one of the things I want to do, is make sure that I'm at the bottom of the longer studies. In fact, I'm going to pause just for a second here. I shift back over to the 5,000 just to double check. You can see that I've got a support level here with this is a price level to which things can gravitate toward. It is moving down, but you got this little bump right here. I'm willing to do a long right now just to show you how to actually place a trade, knowing full well that this may sag down further, but I'm going to go ahead and do that. Double checking with the 1,000 tick bar down near the bottom end of it right here. The 500 tick bar, we're down near the bottom now. It's actually sagging, so maybe it's not such a great trade, but I'm still gonna execute it anyhow, just to show you how the executions themselves work. Once again, drilling down to the 100. Now that ESZ24, that's actually the actual live December contract being traded right now. We're already midway up on the 100 tick bar. If I'm going to go long, I like to pick it right off when it hits down to at least that 80%, if not getting down to the actual green Keltner itself. Again, if I didn't mention it to you again, the greens are the actual Keltner study. The whites are nothing more than, I always take the measurement between the top and the bottom of the Keltner. Then I take 80% of that range and I plot off the bottom. There's 80% off that bottom, and then this white line is 80% off of that top. That's kind of like my indication that when it gets there to say, okay, we're kind of ready, you can get in there. I prefer for it to get to this level to go long, but if it's an aggressive market, I'll take it on the 80%. So this could really be not so good execution because I'm already in late. But I'm going to do it anyhow. I'm going to take it now over to the same 100 tick, but I'm going to go over to the execution platform itself. We are now looking at a split screen. Here's the 100 tick bar, and this is a ladder, a dome, which I think you were familiar with. And here's a trade order panel that I can use. So what I'm going to do is I am first going to go up, and you're not going to be able to see this on the screen, but I'm going to go ahead and hold on. The market opens. The first thing I'm going to do is I'm going to assume we're going to go long. I'm going to go a single order long. A single order long with a stop only, and I take that and then I'm going to go ahead and I'm going to enter it right here, minus 40. And what that means is that's going to be 10 full S&P points. So I'm going to go, I'm going to buy it market, I'm going to put the stop in, I'm going to go ahead and I'm going to say, okay, send the order. Now that ticket is ready to go. And again, we're getting really late in the market. It was initial jazzed up, but I'm going to go ahead and place this.
Order filled.
And now what you can see is it placed the order long and it put an automatic stop 10 points down. And you can't quite see that. I'll go over back to this screen right here. I'm going to drag it over, and you can see that it's stopped right down there. And I put on 2. I was in a hurry to show you this example. I got 2 on. So normally if it was a 1 contract, it'd be 500 initial risk. I've got it at $1,000 initial risk. Now it's going down on me right here. Here's where if I was trading, I was wanting to be long. Bottom of the Keltner, that's where I'm going to go right there. So now I'm going to put it on pause. When I'm actually doing this without it being an instructional video, it goes very rapidly. This seems like it takes a long time, but none of this takes a long time. I'm just taking my time to explain it to you. When I put on the long, shorts I don't worry so much about putting an initial stop on because markets don't crash up, they crash down. And I always want to protect myself because, the system could shut down, but the market's still live. And if I have an order on without a stop, I'm in trouble. So I always put my stop on simultaneously with the order. And there it is. Now, what am I doing from here? I don't need the stop any longer. What I really want is a trailing stop. And this volatility range here on this 100 tick is about 6 points. So I want to go and put a stop on. It's going to be a trailing stop off the bottom. It's going to be of wherever the market is. And right now this is in. So what I'm going to do is I'm going to go over here to this screen and I'm going to put in a sell trailing stop. And here it is, 6 full points. I'm going to simply put this trailing stop on. Bingo. And there it is. Now, what do I do from here? What can I do? I've got actually then, interesting, that the stop actually, sure enough, ends up being 6 points down, ended up matching the 10-point original. Oh no, there it is. Here's the stop, and I actually, because I'm doing this quickly, I only put it on for 1, okay, and I've already got two contracts going, so I'm going to do it again. I'm going to go ahead and I'm going to put a sell trading stop, and there it just put on the second one. So I have two contracts protected on the downside. Now I don't need this anymore. So what do? I go up and I cancel, and that one is at that's the lowest price one. So I'm going to go cancel. I'm going to cancel the one that is at, if I put this on pause, this one, it's just this regular stop right there. I'm going to get rid of that one. I'm going to cancel it. Bingo, there it is. Now I just have my trading stops, and that's all I needed. That's all I needed right there. And now I'm set to go for the day. Now I'm going to put this thing on pause, and what I want you to see is how this trails. Hopefully it will trail. Otherwise it may come down and just simply knock me out. That'll be okay. This is all for demonstration right now. But again, this is live, and had I actually put it on with my actual account, there's no longer any difference between simulated and cash in terms of execution. This stuff goes in thousandths of a second now. So those old-fashioned days are basically over. You might have a 1/4 point, one tick, a quarter point, which is $12.50 per contract spread with the in terms of the execution price, but that's of really no consequence. I don't even pay attention to it anymore. So I'm going to put this on pause, and we'll see what happens. And as you can see, it already went up to this level, and it started dragging the stop up. So at this juncture, we're not at our entry point yet, so we'd still be getting stopped out at a loss, but if it keeps moving, it doesn't take us out here, keeps moving up, the goal is for it to just keep on trailing until it gets to break even, and then just keep going on from there. Not a problem. You can see that it's still crawling up on the stop there. I want to make one more comment here. What I do, this thing, professional traders, I've learned this 40 years ago. you like to wait for the opening range. Opening range is typically at least the first 20 minutes of the day. And after 20 to 30 for sure, you have the opening range done. So what was I doing right from the beginning of this video? I'm stacking up data that I want to see dissimilar things that I can use as guideposts. One would be the forecast pricing. The other one is these various Keltner ranges from big to little. And the other item would be the opening range. The opening range the actual trading itself will create its own support and resistance levels within the context of all that other information we've just discussed. So now you have, the range, the volatility ranges based on volume of trades. You've got the forecast pricing. You've got the direction of the market trend, and then you've got then also the opening range price and support resistance levels themselves, and then you play off of all of that information. It really significantly increases the probability of success. So anyhow, that's where that's at. So I'm going to put it on pause again. Now, I am hoping that this holds and keeps moving up. Now you notice what's happening is that if I was wanting to be a buyer in this market, I would want to buy it if it got right to the green, the lower end of the Keltner level. Ironically enough, at this point, it would come down and just touch this and actually stop me out. So anyway, let's just see what happens. I'm going to drag this down a little bit so we keep on. Don't want to miss anything just because it walked its way off the screen. Oh yes, one other thing is that if I have a 2 contract on, since I'm basically, once I'm executed, I'm working this 100 tick bar range. And if I get it off the bottom of the tray of the screen of the Keltner, and it gets up to the top, I pull the first one off, bag the profit, and that's it. Then I let the other one run. Looks like we might be getting close down to the stop level, but I will just toggle it on and off, just so we can save some time here on the recording. So what you've got is some price support level battling that's going on here. So if it breaks it down, it'll probably get stopped out. Let's see what happens.
Order filled.
There you go. Okay, and so that's how that all works. And anyhow, that's all for now, buddy. Talk to you later.